Everybody, let's get rid of that. Ion, thank you for the tune, but we'll get that off. We are live on Facebook, LinkedIn, YouTube, X, Instagram. That all seems to be working. We are all systems go. Let me get my comments up here, a little sip of coffee. All right. Welcome, everybody, to Mornings with Scott, the best damn business show for medium and small businesses on the planet. We are December 23. Can you believe it? We're so close to Christmas. December 23, 2024. Lots of news in the markets today, but I will not be covering them because we're going to do a special show today for episode 318. Today is a deep dive, a focus on the bankruptcy of KTM AG, the owner of brands and motorcycle manufacturers and bicycle manufacturers, KTM, what else? Husqvarna, they used to tell me to say it that way back in the 1970s. Husqvarna, I think we say now, gas, felt bicycles, other brands of that sort. And even for this episode, I put on my KTM BTO American National t-shirt that I was given. Why are we doing this show? Well, as always, we're looking for news. We're looking for an interesting story, and it gives me an opportunity to provide some business leadership, some insights, some lessons. And we all know that's what this show is about. But also, importantly today, it's because I promised on X. I stupidly promised on X because I didn't know it was going to be so much work and so complicated to provide my thoughts to a community of motocross fans in the U.S. primarily, of which I am. I consider myself a member of that community, specifically These people, I think, are followers of the Steve Mathis podcast and his journalisms. The account being Pulp MX, PULPMX. You can check that out. Who is one of the primary journalists and motocross and supercross journalists in the U.S. And so I follow the sport religiously. I was a participant. I consumed the Pulp MX content for years, and I pay nothing. I don't listen to the commercials. I don't use the discount code. I'm just a freeloader. And so this is a way. This is a way to give back, and hopefully it adds some value. There's so much wrong information about this bankruptcy. It's driving me nuts. It's unbelievable the amount of bad takes that exists, and maybe we can clear some of that up today. All right, before we start, disclaimer, speaking of wrong information, much of what I'm going to talk about today in this episode is fact. We did the research. We dove into the numbers, the publicly reported numbers, because there is a public company involved in this. So we did the analysis, we did the research, and much of it I believe to be fact. Well, no, I believe it is fact. Much of what I talk about today will be reported fact, and I'm using fact in that case in air quotes if you were on the audio version of this podcast. There is so much misreporting, wrong numbers, wrong conclusions, wrong facts. So there's a lot of misreporting stuff going on, but I've looked at a lot of that and derived some facts coming out of that. And some of what I'm going to talk about today is speculation, but educated speculation based on approaching 35 years in the turnaround, restructuring, insolvency world, investing in troubled businesses, buying troubled businesses, being an advisor to troubled businesses, being an interim executive in troubled businesses, exactly like what is going on at KTM right now, KTM AG. And I've worked in many of these countries. I've done that work in 30 countries, not in Austria, where this company is, but it trades in Switzerland. I've worked in Switzerland and lived in Switzerland more than once. And so maybe I have some insight to bring to this. KTM AG is a private company owned by a public company, and that public company is Pierer Mobility. By the way, I looked up how to pronounce this, Pierer, and I see most Westerners are saying Pierer Mobility, and I'm advised in Austria it's Pierer, 2 syllables, so I'm going to go with that. Pierer Mobility. It is not separately reported, and so KTM AG is a private company. It's owned by a public company, but KTM AG itself is a private company, and it is not reported. So we don't have numbers for that unit, so to speak. And also the bankruptcy filing is in Austria, and the bankruptcy process in Austria, it turns out, is not very transparent. Not what we would expect in the West. And even if the court pleadings, the affidavits, the submissions, the motions to court to seek protection, even if that were available, they would be in Austrian German, I presume. Not very helpful to me. And all that to say, some of the facts in this episode may not be exact. Maybe they could just simply be wrong. It's a very, very complicated situation. And the nature of the beast is that no one knows the answers to your questions. That is a rule of thumb that we should just say up front. Anybody who thinks that they have the answers, I'm not just talking about in the moto community, anybody at all. And that includes Stefan Pierer. He doesn't know the answers to what's going to happen here. He's the ultimate owner of all this. He doesn't know. His partners don't know. His lenders don't know. His lawyers don't know. His employees don't know. I don't know. You don't know. It's a fluid situation subject to change. I emailed a credit committee person, as near as I can tell, who was firsthand in court with KTM AG. And I asked him a question because I thought his reporting was a little was off. I'll get to that later. And so I said, hey, did you really mean this or did you mean that? I just cold emailed him. I don't know. And he replied to me from Vienna this morning. And his first line is, thank you. I'm trying my best in the communications of the most significant details of this overwhelming bankruptcy proceeding. Here's a guy in Austria who does this for a living, and he also finds it overwhelming. This is difficult, it's complicated, it's fluid. Nobody knows the answer, particularly the guy running the show, which is Stefan Pierer. That is not a comment on him as an individual, as a lizard, as a leader, a business person. He just doesn't know the answers because that's the nature of the beast. Lastly, I want to point out that Pierer Mobility is a publicly traded company. It trades in Switzerland. Do not trade Pierer Mobility stock based on this episode. Don't buy, don't sell, don't trade it at all. I am not, based on me, I'm not your financial advisor. Talk to your own broker. Get your own advice. I'm not registered, no licensed to give you that sort of advice. I think you ought to follow my advice on your business and how to be a leader and an entrepreneur and make more money and raise business capital, all that sort of stuff. But don't trade securities based on my advice. I noted this morning as I was logging in, the stock is up 17% again this morning as I prepare for this show. I will say generically, I've said it over and over and over again on this show that, by the way, if you're listening, just let me know the volume's working, please. I think it's all good. Can I just check the settings on this? Normally I have, oh yeah, we're good. I think that's going. The stock is up 17% this morning. I will generically say, because I say it on this show over and over and over again, that when public companies go into a restructuring process, rarely does that work out well for the shareholders. And by rarely, I mean damn near never. Why? Because the creditors rank ahead of the shareholders. The creditor debt, the people the company owes money to, it gets converted to equity, and that creates what they call in the financial world dilution, meaning that you don't own anymore what you thought you owned, and it crushes the stock. And that's your best case scenario. Your worst case scenario is the regulators step in and say, wow, this company's toast, and we're just going to cease trade the stock. And there you are. You're just stuck. You can't get out. You can't trade. You can't do anything. I know that Pierer Mobility stock has been down 70% in the last year. It took I almost said something inappropriate. It's declined a lot. And I know that's tempting. And people jump into these situations. I am not advising you, but I wouldn't be touching it. Personally, let's set the table here with some definitions. What is insolvency? So these are definitions not just for our discussion, but I think it's important to understand journalists in the moto community, fans in the moto community, when you're talking to each other, let's use the same definitions because they're all over the place. Insolvency, what does that mean? Insolvency means you cannot pay your debts when they become due in the normal course of business. You can be insolvent, but not bankrupt. So insolvency is you're not able to pay your debts. You can be insolvent and not bankrupt. To be bankrupt, however, you first need to say that you're insolvent. Bankruptcy, by contrast, is a formal process, court-controlled, supervised legal process to either liquidate your assets for the benefit of creditors. Hey, we're going to sell all our assets and we're going to give it to the bank first, or the government first because they're a priority. Then we're going to give it to the bank because they're first secured. Then we'll give it to unsecured creditors. So in bankruptcy, you can liquidate your assets or you can restructure your debts for the benefit of all creditors. Okay, and all stakeholders, actually, because in a restructuring process, you're saying, I don't just want to sell all my stuff and give it to the bank, the cash to the bank. What I want to do is restructure, and that way the creditors will get more money, the shareholders will be rescued, we can save some jobs, we can be employees. So and we can save employees. So the insolvency means you can't pay your debts when they're due, and bankruptcy is a formal, controlled process. And in bankruptcy, you can either liquidate or you can come up with some sort of restructuring plan. And what we do in the bankruptcy world to distinguish restructuring from a liquidation is we often refer to what KTM AG is doing as a formal restructuring. So I want you to focus on that. It's a better framing. Formal restructuring. They have sought bankruptcy protection, but they do not intend to liquidate. And I will conclude at the end of this episode by telling you they likely will not be liquidating. I don't see that as a reasonable option for anybody. They're doing a formal restructuring. How does a formal restructuring process work? That was one of the questions directed at me. I'm not going to get into the details because from jurisdiction to jurisdiction, from country to country, the law changes dramatically if you are a practitioner in that field. But there's no such thing as a unified global bankruptcy law. It is different in every company. And Pierer Mobility, the parent company of KTM AG, has over 100 operating companies by my count, and it's over 140 countries that it operates by my count. And all of those 140 companies have a different law with little nuances. And so this is a hugely technical and complicated restructuring file for that reason. But even though it's different in detail in every jurisdiction, and this one is filed in Austria, but there's companies all over the place that may be affected. They will be affected for sure, but may not be formally filing. The intent and the outcome in any jurisdiction is pretty much similar. So we could talk about the process of this formal restructuring at a very high level, and we can have confidence that we're going to be right about that. So as I said before, to go into bankruptcy court to start a formal restructuring, you first have to declare yourself as a company to be insolvent. I can't pay my debts when they're due. You can't pay your bills, your creditors. Well, who might those creditors be? Well, that might be your suppliers. Maybe you've stretched from 30 days payables to 90 days payable. Maybe the suppliers are cutting you off. Maybe they're angry and pissed. Maybe they're frustrated. Maybe they don't trust you. Maybe they're suing and they're about to get judgments against your company. Those would be a creditor. Your bank is a creditor, a secured creditor, which means they have a charge, a mortgage charge on your house. Like they have something they can actually go after, something specific. Maybe you're behind on your debt service, your interest and principal payments. Maybe the bank is frustrated because you violated financial covenants. KTM AG has announced that hasn't happened. I don't believe that to be true. I'm certain it has happened. Maybe it didn't happen technically at the time that they did that press release, but for sure they violated financial covenants. What is a financial covenant in a loan agreement? It's like a contractual promise. I promise I won't lose too much money. That's a covenant within a promise within a loan agreement. And if you break that promise, it's an event of default and the bank can call for their money back. I promise I won't suck all the money out of this company and pay myself personally before I pay you off, Mr. Ms. Bank. And so those are types of covenants that exist, and maybe you violated those, and maybe the bank wants its money back, but you can't pay them because no one else will lend you money, and so you're kind of stuck. Maybe it's your landlord you're not paying, you're behind on lease payment. Maybe it's your employees you're behind, you've got missed payrolls, or the government, statutory remittances, VAT tax remittances. There's all sorts of creditors of varying importance that you may not be paying. And if you can't pay anybody, that is often in almost every country that I know of anyways, the technical definition of insolvency. And so what do you do when you're insolvent? Oh, by the way, I should say in the case of KTM AG, hey, Jeff, thanks for joining us on, I think it's Jeff, on Instagram. I can see comments, by the way, on the other platforms, but I can't see usernames unless you comment, something like that. So anyways, just I have to go to Instagram on a different screen to see who's on there. In the case of KTM AG, it was disclosed in Austrian court last Friday that they missed payroll. Well, there's a problem. They missed payroll back in November. They didn't pay at least some of their employees, and that's a pretty drastic thing to do in a business, particularly in Europe. Like it's bad in the US, but it's way worse. There's bigger consequences in Europe. I think it's safe to assume that if you don't pay your employees, safe to assume that you would be, if you're running a business, be paying your employees as long as you possibly can. You would cut back on other payments first, and therefore it's safe to assume that there's lots of creditors that were also not paid, like suppliers. It's safe to assume this is a real difficult financial mess, and that KTM AG waited far too long to fix its problems. So like I said, insolvency means that you're not paying your debts when they are due. And I want you to pay particular attention to this, because I see a lot of incorrect statements in the community on the internet about this. If insolvency doesn't mean you're losing money, that you lack profitability. That's not what causes bankruptcy and insolvency. It contributes, but it's a bad frame. Of course, losing money contributes to the problem. Pierer Mobility earned EBITDA, earnings before interest, taxes, and depreciation, of euro 381 million in 2022, and it went up to, down to 323 million. In 2023, their year end is December 31. So we haven't seen 2024 yet, but I found a investment bank analyst research firm in Switzerland where this stock trades, and they cover this this particular company, and they've estimated in 2024 the EBITDA will be a loss of 18.6 million. So 381 million in 2022, 323 million in 2023, all the way down to 18.6 negative EBITDA in 2024. EBITDA, earnings before interest, taxes, depreciation, and amortization, is not income. It's a shortcut cheat that we in the financial and business community use. You start with net income, you add back your interest. Who cares about what interest we have to pay to the bank and all that sort of stuff? You add back your depreciation and amortization, which is really just a proxy for I need to reinvest into this business every year a certain amount of money just to stay even on my technology and capital equipment. You add back your taxes. Who cares about that? And you come up to EBITDA, earnings before interest, taxes, depreciation, and amortization. We talk about this because it's a useful financial metric for business valuation purposes. Not relevant at all to this discussion, except that's what everybody's going to talk about is EBITDA. The real net income loss, and so the net loss in 2024 is estimated to be negative 209 million. And I almost said dollars here. Let me just say a quick comment on foreign exchange. Pierer Mobility reports in euros. A lot of the information about Pierer Mobility, which trades in Switzerland, is in Swiss francs. And you listening to this are thinking about this in US dollars. Now, fortunately for us, all of those currencies are materially close to each other in valuation. And so think about this any way you want. You're going to get the point of the picture. I think the Swiss franc and the euro are damn near trading equivalent. And if you're thinking in US dollars, you're going to be about 4 or 5% off, something along those lines, I think. And so it doesn't matter. There's just, when I say 209 million loss, you can think about that in any currency you want, and it's not going to change the point of this episode. Losing money is not good, but losing money is not what insolvency is. That insolvency is not paying your bills when they're due. You can lose money and not be insolvent. Look at any Silicon Valley startup with venture capital money. They lose tons of significant net losses, but they're not insolvent because they have cash to pay their bills. You could make money, you could be profitable, and you could be insolvent. Why? Because you have too much debt, right? Because it's a debt payment issue. You could make money, you could have net profit for accounting purposes, net income on your income statement. You could have a reasonable debt level and you could still be insolvent because you have terrible cash flow. Why would you have terrible cash flow? Well, maybe you have too much inventory. That would be an example. For the year ended 2022, Pierer Mobility had financial liabilities of 535 million. For 2023, it was over 1 billion in financial liabilities. So between 2022 and 2023, their problems started, near as I can tell, at the end of 22. This isn't a new thing. They doubled the amount of debt that they have. In 2023, they lost $413 million in cash. Remember, I said cash flow is a problem. Well, out of that 413 million negative cash flow, 313 million of that was spent on acquisitions, primarily of production capabilities in foreign jurisdictions. I didn't do a deep dive onto that in particular, but they were investing in Bulgaria so they could produce there and different places. So things are going down in the market and they're buying and spending money like drunken sailors in other jurisdictions. In 2024, they are estimated to lose another 685 million in cash, which is why you'll see, we'll talk about their financial liabilities have gone from 500 million in 2022 to $1 billion in 23. And at the time of the filing, we're going to see they're over $2 billion. They've been doubling their debt every year, it appears. It's estimated or reported by other people that there's a full year's worth of bikes of inventory in the distribution channel somewhere. That could be in the warehouses, could be in the distribution centers, it could be on the retail floors. There's a lot of bikes. people aren't buying these bikes, maybe because the market's down, maybe because the brand's out of favor, but bottom line, they're not buying the bikes and there is too much inventory. Hey, King Wiley, thank you for joining us on Instagram. So you're insolvent, you're missing payrolls, you're missing other payments. In the case of KTM AG, it's because of huge debt loads and negative cash flow, and you're concerned. Eventually, one of these creditors is going to shut down your business. Governments can step in, they can seize assets, they can seize your bank accounts, they can pay themselves, they can pay the payrolls that you miss. Creditors that get a judgment against you can do the exact same thing. Your business is at risk. So what do? What is the process here? What is KTM AG doing? They're running to the bankruptcy court, and they're saying to the bankruptcy court, Judge, help. I need two things, maybe three from you. Number one, I need a stay on creditors. A stay. What does that mean? It means that no one can continue to do anything aggressive against the company. The government can't seize your bank accounts. Legal proceedings are stopped. Judgment creditors are stopped. The banks are stopped most of the time. Everything is stopped to give you time to sort out your affairs. That's what a stay is. And that is the first thing that the bankruptcy judge will be granting. In fact, in this case, has already granted. Second, you say to the judge, I need the stay, but I also need your help. I want to bring all of my creditors together and present them a restructuring plan that we can all agree on, maybe a majority of creditors or 66 and 2/3, depending on the jurisdiction you're in. And once the creditors agree, Judge, and they're gonna be happy with this, I need you to enforce that court order. I need you to make it true in law, because without your help, this is like herding cats. I just can't get this done without your help. So I need those two things. And third, and definitely in the case of KTMG, I keep saying KPMG, which is where I was alumni from in the 80s, KTM AG, I need some money to survive this process. I need cash. So I need the court to approve what we would call in the West, a DIP loan, DIP, debtor in possession loan. I'm not going to bother you with the definition or details of that, but the bottom line is it costs money to do a restructuring. And also you're out of money and you can't even sustain yourself. So you need new cash, and you need to borrow that cash, and you need to borrow it from a lender. And that lender doesn't want a fourth lien on your assets or be unsecured and never collect again. What they want to be is first. They want to rank in priority ahead of the existing bank, right? And so a court can do that in most jurisdictions. They can just say, all right, this company needs money to restructure. We're going to approve a DIP loan. They called it in the press release of KTM AG in November. They called it an interim finance loan. But we're going to approve this loan, and we're going to rank it in security above everybody else. And then everybody else is going to freak out because they didn't want that to happen. But that's what's going to happen. So we're going to skip the definition of DIP, but that's the flavor of that. So does this apply to KTM AG? You bet it does. Their press release on November 26th referred to their inability to secure interim financing, which was elsewhere reported to be in the range of 300 to 400 million they needed. Remember, they're already doubling their debt every year. Do you think there is no one in the world that would lend them 300 or 400 million? Of course there is. Of course there is. I would even organize that from our investment firm. We would need to syndicate it, but for sure we would. But they won't. What they won't do, and what we wouldn't do, is lend that money behind other creditors. You need to be first secured. They need to provide a DIP loan, and therefore you need a bankruptcy court to get this deal done. So that's the process. And in most jurisdictions in the world, this type of court process is available. Why? Why is it available? Because lawmakers see the need to balance the rights of creditors to get their money back. Fair game. You lent money to a company, Mr. Bank or supplier, you haven't been paid yet, you should be able to collect. But you need to balance. In law, the lawmakers want to balance that against the needs for businesses to survive and specifically to provide jobs in that particular economy, right? And so that's a balancing act. We could kill the company because we don't trust money and management, and the creditors will get whatever they get, or we could try to save this company and save the jobs. And that And the way to do that, the way to save these jobs, restructure the company, is to present a turnaround plan, a restructuring plan. And what is a turnaround plan or restructuring plan? That's where you say to the creditors, look, if we stop operating, and to the court, if we liquidate, you're not going to get much money. I mean, really, what is a gas subframe for a model that hasn't been released yet, unassembled? What is that worth? It's not worth very much, right? Instead, here's our business plan, our projections to continue as a going concern. We'll do the projections out for 3 to 5 years, and in those projections, you'll see a bunch of detail and a bunch of stuff and the changes that we are going to make. We're going to cut costs. We're going to sell assets at a discount. We're going to sell business units entirely to raise cash. We're going to starve subsidiary operations of further cash. In fact, we're going to go to our subsidiary operations and we're going to steal all their cash as well and bring it up here for the benefit of creditors. And then there'll be lawsuits about that because that's like shady, probably. We're going to get dip financing. And because of that, we were able to pay creditors more than they would get in a liquidation. Judge, we want you to approve this restructuring plan and enforce it on the creditors. And what the judge is going to say is, cool, let's put that to a vote with the creditors. And if they approve, if the creditors approve this, well, then maybe the plan is approved. And if they don't agree, then maybe the entire thing falls apart and you risk going into liquidation mode. But more likely in this situation, in the situation where KTM is such a strong brand, more likely the parties will just go back to the negotiating table and try to come up with something more acceptable. As long as the huge egos and hubris don't get in the way, there's no reason this company should fall apart and this process should fall apart. I do think that hubris and huge egos are a problem. They are a problem. First of all, they're often a problem in this sort of deal, but in this in particular, the whole thing just smells of ego, and that is cause for concern. I would think, just checking comments over here. So that's the process. Last week, KTM was in their first hearing in court in Austria in front of the court. And they reported, let's see here, euro $2.1 billion of debt. Remember I said they're doubling their debt every year, it seems. So $2.1 billion of debt, around 1,600 creditors. They've reported $316 million of assets in liquidation. So there's your benchmark. If we sell everything, we're going to get $316 million. And with that, we have to pay $2.1 billion. That is a 15% return on average to the creditors. And the actual number they reported was 13.87%. I assume the difference there is professional fees. They submitted a restructuring plan at the first hearing, so they had it prepared already. And that plan says we can pay creditors 30 cents on the dollar, 30%. So moving up from 13.87 to 30. But that's not, there's confusing math in there, and I don't think I'll bore you down with the details, but the 30% on the detail, on the dollar, 30 cents on the dollar, does not apply to the banks. The banks would get out whole because they're in first place on this. It applies to the suppliers, to the unsecured creditors, to anybody else beyond a supplier that is an unsecured creditor. That's what makes sense to me. And so I emailed this creditor person that does this work and was in court in Vienna. And kindly, as I said, he replied to me this morning and said I was absolutely right. So don't go around thinking the banks are only going to get 30 cents on the dollar. That's not the way this works. It's the unsecured creditors that get hit first and the shareholders that are even hit before that. But go ahead, buy that stock if you want to. Speaking of creditor types, let's quickly touch on something that is not reported anywhere about KTM AG in the restructuring, but is absolutely true. In a restructuring, you can break fixed contracts that are unprofitable or that you are otherwise stuck with. An example would be a bad lease, a lease on real estate, a lease on equipment. Why is it, do you think, that American retail chains file bankruptcy so often? Is it because they have too much debt? Yep, that's true. Bad cash flow? Yep, that's true. But the real hidden gem in a retail bank chain bankruptcy filing is you can get out of your leases that suck. And it's a fixed cost business to a large extent, and you need to get out of those leases. And the only way to do that is through bankruptcy. And so KTM AG has that issue as well, for sure. If you're going to restructure your and slim down your production facilities, for sure there's a bunch of debt and leases associated with that, fixed contracts, and you can get out of it. You can also terminate expensive, long tenured employees and not be hit with termination of severance payments, no matter what the employment contract says. Now, I don't know if that's technically true in Austria, but it's definitely true in the West. And often in business, it actually costs you more cash to reduce your headcount than to keep your headcount the way it is. You literally can't afford to fire people. But in a bankruptcy, you can deal with all that stuff. Now you're asking yourself, what does that mean for Chase Sexton's contract? What does that mean? Well, it depends. It depends entirely who the contract is with, because I doubt it's with KTM AG, the company that filed. It was probably with some American racing company that is a subsidiary of KTM AG. And unless that specific company that is the counterparty on the contract files for bankruptcy protection, that contract can be enforced. And by the way, I'm sitting here in my home studio office, and somewhere around here, I have a bunch of Tour de France athlete contracts from a restructuring I did of one of the teams and the bicycle manufacturers. And you position yourself before I came along, but just generally speaking, to put those contracts into a company that maybe you could blow that contract out if you really wanted to, but then you never would. You never would, because what would it do to the value of that brand if you started not paying your athletes? If KTM was aggressive with Chase Sexton, that's not going to be good for KTM in America, possibly forever. So I don't think those contracts are at risk for those reasons, but you can, in a bankruptcy, blow out contracts and not pay the penalty. And I've heard a lot of reporting to the opposite. I will say that technically speaking, you do incur the penalty, but the penalty is an unsecured claim that goes into the bankruptcy estate and gets restructured with everything else. So the effect of that, the de facto effect, is that you just don't end up dealing with it, and you can get out of all these fixed obligations. Back to the court hearing, it's widely reported in European moto journals that KTM will pull out of MotoGP and other related race series to cut costs. KTM issued a press release to say the opposite. Sort of the same, no, we're not. Nothing to see here. Just move along. Who's wrong? Is the reporting wrong? Is KTM lying in their press release? Well, I wasn't in court, as I said, and I don't speak Austrian German anyways. But and based, by the way, on my long experience, decades of experience of doing this work, I don't believe either the company nor the reporting. They're probably both wrong. But let me hazard a guess, an educated guess about this. I highly doubt, I'm almost certain the restructuring plan presented to court is not so specific as to actually say we're pulling out of MotoGP entirely. Why would the judge care? Why would they say that? And why would the judge? The court doesn't care. All the court cares about is that there's a restructuring plan that would pay creditors 30 cents on the dollar or more, whereas in liquidation, they would only get 13 cents on the dollar. That's what the court cares about. They don't care about the hardcore details, and some of the creditors might care about that in particular, but the court doesn't care about that. That would not normally be part of the plan. And I would I would inform you, based on our research, that the original party that said they would get out of MotoGP was not KTM. It was a creditor of KTM, someone that's getting squeezed in all of this. So consider the source. I believe it 100% true, 100% true that KTM's plans include cutting racing expenses. Selling and racing expenses in 2023 were $290 million, about 42% of gross margin and about 11% of revenue. That's not an unreasonable percentage in this industry, but it's a huge number, right? They're only losing $18.6 million at the EBITDA level in 2024. It would seem pretty easy to take that out of the racing budget of $290 million without hurting sales, because the bikes aren't selling anyways. So it's not going to hurt just to cut back a little bit, regroup, and come back stronger, right? So 100% for sure, KTM will be cutting racing and sales expenses. My speculation, therefore, is that racing budgets will be cut, and that might be in the form of MotoGP entirely. but I'm doubtful I'm not saying it is going to be MotoGP. I'm saying that might be. But I really doubt that was a specific disclosure. And even if it was a specific disclosure, that doesn't mean that that is what's going to happen. You can disclose things. Here's our first cut of the restructuring plan. There's the business plan. There's the projections. Here's what we're going to do. Oh, does that say you're cutting MotoGP? Yeah, it says that. But then a week later, you find out, I didn't consider all these expenses. Maybe we're better to cut our sales and racing expenses another way. This is a plan, and a plan is a plan. Reality is reality. So the bottom line is, I'm not saying it's not going to happen. I'm just saying I'm not buying the reporting on this, and I wouldn't. It's a just big box of uncertainty. By the way, some have reported that and argued that KTM is under contract with MotoGP to race until 2026. Problem solved, right? No, as I already discussed, you can break a contract. Contracts don't continue in a bankruptcy. They can continue. You can say to the court, hey, I want to do these things and I don't want to do those things. They can get out of that without paying the price. Also from the court hearing, a European creditor protection firm told the court that KTM had found 3 interested parties willing to invest $70 million in KTM. That is enough to keep the company running until at least the next court hearing set for January 24th. Scott, have you looked at the Rocky Mountain Bikes receivership, Chance? The bike industry is so saturated. It would be so. No, Scott, I haven't looked at the Rocky Mountain Insolvency. I didn't even know about the Rocky Mountain Insolvency, even though out of all of my brands in here, I have a Rocky Mountain. But you're about the 3rd or 4th person to send that to me, so maybe I'll take a look for us. Not much reporting. Sorry, where are we here? 70 million. I got 3 parties want to give us $70 million so we can continue operations for a month or so. There was a lot of reporting that said that these parties were going to put in 700 million, not 70 million. Just think about it. That makes no sense. 700 million. They only said they wanted interim financing of 300 to 400 forever. So they don't need 700 to get through 30 days. And I think the 30 days is wrong. I think the next court hearing is in February. So there's mixed reporting on that, but that doesn't matter. It's 70 million. I looked that up to the direct source, and that's what it is. Now, here's what I want you to understand about that. Do they have a commitment for 70 million to go into this thing? Well, I'm going to say no, they don't. Often in an initial court hearing, what are you trying to accomplish as the management team? Well, you're trying to buy more time. You're always trying to buy more time. And if you need to buy more time, you need to convince the judge you need more time. You need to put the judge on the spot. And so how do you do that? Well, what you say is, hey, I got all these people. You wouldn't even believe, Your Honor, how many people want to give us cash so that we continue operations. If you pull the plug, I won't get this cash. We're going to lose jobs. The brand's going to disappear. People aren't going to get their racing, but mostly you care about the jobs. I got 3 people, probably more, but 3 that I'm happy to talk to you about that would want to put money in this thing to continue operations. And if you have that in disclosure, if it's plausible, I'm not saying they lie. I'm just saying there's a lot of gray area between saying someone's interested and actually getting the cash in the door, right? Well, what is the judge to do? Are they going to pull the plug on you and then people lose all the jobs and the business disappears? Are they going to take that risk? No, they're not going to do that. They're going to let you slide for 30 days and see what happens. That's, if they believe you, if management has any credibility whatsoever. So that is a standard disclosure if it's plausibly true, and don't confuse that with reality. Do you want more evidence that this isn't happening yet? Pierer Mobility hired Citibank to help them restructure December 18th, like 2 days before they walked into court. They hired an investment bank, which would be similar to what Sinclair Range, my company, would provide as a service. Yeah, I'll go get you that money. Don't worry about it. But I'm not going to get 2 days, right? So they don't have the money yet. They're not going to have the money anytime soon. And if they do get some money, it's going to come from Stefan Pierre and the auto company Bajaj. Is that the name? Bajaj. They're going to get the money from existing stakeholders, not from third parties. I'm telling you, that's what's going to happen. All right. So that is the overview of a formal restructuring process. For my regular listeners, look at, I see on my clock here, we're 44 minutes in. It was a 30-minute show. But this is a deep dive. Like I said, we're going to probably head up to the 60-minute mark, somewhere in that range. Let's talk corporate structure. We've done the process. Now we're going to talk corporate structure for a minute, because I don't want you to think, as you're considering this situation, that this is isolated to a company in Austria and 2 other companies in Germany. It is not. It is true that you seek court protection as a corporation, not as a group. And you do that in the jurisdiction that your corporation is headquartered or where the bulk of its operations are. But there are business implications for the entire group. The primary company in formal restructuring, as we said, is KTM AG, a Austrian company. There's actually 3 companies that filed. The other 2 are wholly owned subsidiaries. And that's probably where the missed payrolls are. That's probably why they filed as well. Now, KTM AG itself is a wholly owned subsidiary of Pierer Mobility AG, and also an Austrian company that, as I said, trades in Switzerland. And Pierer Mobility, although it's a public company, 75% is owned by a holding company. We don't care about the name. And so the 25% would be what we would call in the trading business float. So that's what the public owns, and they trade on a day-to-day basis. But the 75% is owned by a holding company. And the holding company, in turn, is owned 51% by Pierer Industries AG, which is Stefan Pierer's family business in Austria. The other 49% of the holding company is owned by Bajaj, I don't know how to say that, but one of the largest auto manufacturers out of India. Okay, so the point being here that Stefan Pierer controls this. He controls 51% of the holding company. He has a partner for the Indian manufacturer of automotive, and that holding company controls 75% of the public company, Pierer Mobility, and Pierer Mobility controls 100% of KTM AG. Pierer Industries, the private family company, as I said, it's owned by Stefan Pierer, describes themselves as the majority shareholder, which we just talked about. Also has operations in high-tech automotive and aerospace companies. It's a major shareholder in Austrian electronics developer and some real estate. Total revenue for the holding company is disclosed as euro 3.6 billion, EBITDA of 2023 of $437 million, 11,000 employees, of which 6,200 are in Pierer Mobility. So they have a lot of employees beyond KTM. And Pierer Industries is big business, and it controls Pierer Mobility. Pierer Mobility is big business in its own right. Obviously, it owns the brands KTM, Husqvarna, Gas, other bicycle brands. Claims to have greater than 10% of market share for motorcycles in Europe, USA, and China. It has euro 2.7 billion in revenue in 2023. Which grew from 2022. So on a revenue basis, Pierer Mobility, the public company, is 75% of Pierer Industries. So the employees is more spread out, but Pierer Mobility is the bulk of revenue in Stefan Pierer's private company, Pierer Industries. KTM AG, the company that is restructuring, as I said, is a wholly owned subsidiary. And as I said, there's not actual numbers on KTM AG because it's a private company. It's all consolidated into the public company. But there have been past interviews and news sources that I have found that said that KTM AG is basically 95% of Pierer Mobility. And I believe that to be true. Let's not hold on to the 95. Maybe it's 96. Maybe it's 80. I don't know. But it's the bulk. It is the bulk of Pierer Mobility. So why am I telling you all this? Because to understand the situation, you need to understand and look through the noise of, it's just in this company. KTM AG is KTM America, Husky America, Gas America. KTM AG is Pierer Mobility. KTM AG is Pierer Industries. KTM AG is the golden goose. None of this group is isolated. KTM AG dominates everything globally, down the chain, up the chain beside KTM AG, it's all going to be impact. If the restructuring plan includes dip financing, cutting costs, less people, less racing, that will not be isolated to Austria. Those will be global initiatives, including all of the subsidiary companies that are not formally bankrupt, that may not even be insolvent. It's quite common in these situations to go scoop all the cash out of the bank accounts in America, for example, to fund the problems up the chain. Also, it is very common, and certainly the case at KTM AG, that some of these creditors that are not going to collect all their money in Austria, remember that 30%, 13%, they are what they call cross-collateralized. That means, like, look at, man, you want $10,000 for me to buy a new watch. I'll lend that to you, but I want security over the watch. If you don't pay me, I get to take the watch from you. Also, I want to charge on your house, right? I want a mortgage on your house. That's called cross-collateralization. If you're lending a bunch of money, billions, well, not billions, but $1 billion or hundreds of millions of dollars to KTM AG, do you just not take security over all these other subsidiaries? I promise you that they're cross-collateralized. I know that because I found some disclosures in the financial statements to that effect. It would take a lawyer a month to research all of this in every jurisdiction to do a legal opinion about who has security and in what order over what. So I am not doing that for us, obviously. But the point being, there is a real risk. There's a real risk this thing spins out of control globally, because if you don't collect your money in Austria, maybe you go to America to collect your money, right? I'm not saying that's true. I'm just saying that's a real risk in this situation, and it would not be uncommon. So know this, there's nowhere to hide from this mess. All jurisdictions will be impacted. I see a lot of conversations on the internet that, it's just in Austria, it's all going to work out fine. No, everything will be impacted because KTM AG dominates the operations of all of these companies. All right, so this all started with a press release, November 26. Thanks, King Krishna, for joining us on Instagram. And a shout out to Scott on, where are you? You're on LinkedIn. Thank you for joining us. So started with a press release. Let's just review that. Now that we've set the table, we've done all the background. What did their press release say? It says, as reported, KTM AG is in the process of implementing restructuring measures due to high financing needs. Yep, we talked about that. They needed some cash, and they're going to have to restructure and get the help of a court to do that. The management of KTM AG assumes that it will not be possible to secure the necessary interim financing in a timely manner. Exactly, because the interim financing needs to be first secured, needs to be that dip loan. That's why they have to go to bankruptcy court to get that done. The executive board of KTM AG therefore decided to file the application for the initiation of judicial restructuring proceedings with self-administration over the assets of KTM AG and its subsidiary components, blah, blah, blah. Self-administration just means that, hey, man, we're still running the place. Management is still in control. The bank didn't come in and take over. We're still running it. Trust us. Everything's going to be fine. That's what self-administration means. These proceedings give the opportunity to continue to manage the assets under supervision and to recognize the KTM group independently. These proceedings give the opportunity to continue to manage. Yeah. All other subsidiaries of KTM AG, in particular, all the sales companies, are not affected. Yes, they are. They're definitely affected. We just proved that. Cost cutting will be global. Inventory problems are global. Asset sales of business units and brands will be global. Credit cross-collateralization may cause this to spread globally. It's a technical truth that the other operations in other jurisdictions didn't file, so they weren't, affected that way. But they sure as hell will be affected from both a cash, profit and loss, cost cutting, headcount, everything. Everything will be affected. The aim of the proceedings is to agree to a reorganization plan, turnaround plan, restructuring plan, all the same thing, with the creditors within 90 days. A redimensioning. I'm just hoping this word redimensioning is it's a difficult translation from German to English. I certainly hope nobody used that consulting buzz term. Redimensioning is intended to sustainably secure the existence of the KTM group and to create the basis for emerging strengthened from the process. We're going to restructure. We're going to come out healthier and stronger. Do you know who gets in and out of a restructuring process in 90 days, apart from almost nobody? Small, simple businesses that have a deal in place prior to the filing with its creditors, what we would call in the business a prepackaged bankruptcy deal. And we already have this organized. We got the money. We got the deal with creditors. Everybody's going to vote positively. And we just need Your Honor, the bankruptcy court to bless this thing to put it into effect. That's who gets in and out in 90 days. Global companies that are restructuring in multiple jurisdictions, that need bridge financing, that need a DIP loan, they do not get out in 90 days. They restructure way, way, way longer. I'm certain that management hopes they're in and out in 90 days. I'm certain someone who's consulting to them sold them on the idea that this could be done in 90 days. But I'm telling you, I'm very, very skeptical of that claim. Maybe it happens. Maybe it's true. But if it does, that would be a Ricky Carmichael in the mud type of performance. It would blow me away. I'm highly doubting that that's going to happen. All right, let's head to the conclusions. Now that we have the lay of the land, a bunch of questions were thrown at me, questions and concerns. What is the process? What will happen in the end? Will racing be impacted in America? Will MotoGP racing be impacted? Will American operations in general be impacted? Will warranties and future development be impacted? Let's start with cost cutting. Yes, racing will be impacted. It's a huge expense intended to market and sell bikes. The bikes aren't selling anyways, and there's way too much inventory. It is completely logical to cut back on racing and sales costs. We already talked about the numbers behind that. You can do that in a multitude of different ways. You could cut a little bit from every budget right across the globe. You could do that, or you could wipe out entire series, like participation in a series like MotoGP. I'm not saying they're going to do that. Don't freak out. I'm just saying that's something you could do. Or you could do some combination of all of that. It is a fluid, high-pressure negotiation of the plan. There's only certain things that there's a lot of different things you can do, a lot of different ways to skin that cat, as they say. So we don't know the answer, but 100% for sure, 100% for sure, racing will be reduced. Yes, operations outside of Austria will be reduced, including in America. Cost cutting is the only sure way for management to convince creditors that there is a plan that they can believe in. It is the only thing, cost cutting is the only thing in management's control. You can cut costs and you can suck cash out of remote operations. Those are the things that you can do. And management, things that you could do to show that your creditors that you're serious. And management at Pierer Mobility, they already have no credibility. They have no credibility in the financial world. If they did, they wouldn't have missed payroll. Okay, now they can get that credibility back, and they can do that by focusing on hard numbers and skipping the BS fluffy talk, which they haven't been doing a good job at. So far, they haven't been doing that, but I think they will be forced into that. I hope that they're forced into that by the process itself, and they will be cutting costs globally, mark my words. Will warranties and development be impacted? So warranty obligations, you can blow those out in a restructuring, in an insolvency, bankruptcy process, but I don't know where the warranties lie, so I'm just going to avoid this question. Hypothetically, you could, but they may not be, and the warranty may not have been issued by the company that's in bankruptcy. So I don't know. I'd be skeptical, though. Development, research and development, new tech stuff, 100% is going to be impacted in the short term. That falls under the category of cost cutting. It's really easy. It's really easy to cut R&D for a year or two without impacting your operations in the short term too much. What is the process? Well, we've covered that already, I think, at length, which leads us to what will the outcomes be? Here's the universe of possibilities from this type of process. Number one, you fail. There's a possibility. I'm not saying that's going to happen. I'm saying in the universe of possibilities, that's something that should be considered. I don't see, and when you fail, by the way, the whole thing falls apart, and the court says, bring in a trustee, just liquidate all of this stuff. It's not working. You guys aren't agreeing. I don't believe you. You're lying to me. Whatever's going on, it all falls apart. I do not see this option as probable, despite what I think is mismanagement of the process. And that's simply because the brand of KTM is so strong that someone from the outside, or even an existing stakeholder, hint, hint, is going to come in and buy the entire thing at a discounted price. Okay, so I don't see that as possible. At the other extreme of possibilities, the restructuring plan goes exactly as disclosed. It's accepted and it works as presented. The creditors of the impacted get paid their 30 cents on the dollar instead of 13 in 2 years. KTM cuts costs, reorganizes its operations, becomes profitable again, and comes out the other side healthier to tackle the world. That's certainly possible. The key to success in this situation is leadership, crisis management, leadership. Specifically, you have to gain trust. You can't do this without the trust of your creditors and your community. And to get trust, you have to remove the emotion from the negotiation. You can't issue fluffy press releases that say we're ready to race. That's simply not true. You do that by first admitting that you're in trouble. That's my advice to everyone in this situation. I'm in trouble, and you need a message that said, we've made mistakes. We have made mistakes. You need that kind of message. And the second thing you need to do in your messaging is commit to change. These are the mistakes we made. Here's what we're doing about it. We've made these changes internally. We're going to take a step back. We're going to do this and that. These things are going to be impacted, probably. Nothing's for certain. And then we're going to move forward. You need to have full disclosure. You need to admit error, and you need to change. And that way you can rebuild your credibility. And I don't see any of that happening in Pierer Mobility. Do you? I don't see that. I see fluff. I see hubris. And hubris, ego, is the death of these companies. So I very much worry about that. I give the chances of this going forward the way that it was press release, about a 25% chance of success. I mean, maybe it would, but I'm not betting on that. Somewhere in the middle, you got your two extremes. Things go as planned. Sorry about that. I cough things out. Things go as planned, or things completely fall apart. Well, somewhere in the middle is a more aggressive restructuring plan that includes more aggressive cost cutting, more aggressive asset sales, including brands to third parties to raise cash. They may also include a change in management or the appointment of a chief restructuring officer to temporarily take control of such decisions and actions. I'm often brought in as a chief restructuring in these situations. What is that? That's someone who's willing to go in, take control above the CEO. Okay, so you have actual influence to take the company from here to there, right through this transition. Then you hand the company back to the CEO or whoever the remaining management team is. It is a transitionary role of crisis management to be the one that stands up and say, wow, this company's really messed up. Here's the errors, and here's what we're going to change, and get all of the creditors on side so that this is a success. And it will be more aggressive. It will be way more aggressive cost cutting and asset sales than is currently being pitched. That would happen in that scenario. I would give this, if this thing doesn't, I gave a 25% chance of their plan working. If it doesn't work, then out of the remaining 75%, I think 40% chance of that coming, of this option coming true, so that they do come up with a restructuring plan, but it's way more aggressive and it spreads around the globe in cost cutting and including races and all that sort of stuff. It's a complex deal. There's a lot of financial distress. There's many global entities, and there's a lack of confidence in leadership that to manage this transition, which all leads me to believe there's a decent possibility that they could restructure, but it's going to be way more aggressively bad than is currently being presented. By the way, I've been picking on Stefan Pierer here a lot. It probably sounds that way. I'm really not. Like the current leadership, clearly, the evidence is that they are fantastic entrepreneurs capable of building a huge and successful business. We should recognize that, and we should applaud that. That's what the evidence is. But it takes a different person, a different personality type to get through this transition, to get through this mess. I don't see it. I don't see it. In fact, it seems to me the entrepreneurial spirit that built the company is exactly the opposite of what is required to get through this problem. That's just the tone that I picked up in the research on this. So those are three possibilities. The fourth one, and I think this is the most probable, a significant possibility, is that someone completely out of the blue, or maybe from existing shareholders, hint, hint, shows up and offers to buy all of the debt or all of the assets at a really discounted price. Still more than the 30 cents offered out of the current plan, but at a discounted price. And this type of transaction is quite common, particularly when there is an extraordinary brand. What is the brand of KTM? Forget about all the numbers I've given you. What is that brand? What would you pay for? If you had all the money in the world, what would you pay for that brand? Well, here's an opportunity to buy really on the cheap. You don't have to pay shareholders. You don't have to pay shareholders. You don't even have to pay anything, zero. You don't even have to pay the creditors all they're worth. So why would you not, if you had all the money in the world and you're interested in this space, why would you not step in to do that? And so they could do it by buying the debt, which Europeans hate, but that's what I would do in America. Or you can buy the assets from the court. That can also work. But the bottom line is you end up owning the company, same brand, new owner, new management, new priorities, and who knows where that leads. I would put out of the, if it doesn't succeed as planned, which I said was a 25% chance, then it moves on to the next stage. I think this is 60% of that. I said 40 is they have a successful restructuring with a more aggressive cost-cutting plan. Well, I think there's a decent chance, the most probable out of all of this, not anywhere near guaranteed, right? Not anywhere near guaranteed, but I do think it probable that someone's going to come in here and there is going to be a shifting of priorities and a shifting of the ownership pie, to use a mathist term. So I think that's what's going to happen. And if I wanted to buy this company, this is what I would do. I would go after the secured debt right now. That's a pretty good strategy. And as evidence, there's already been 2 third parties not related to the company that have showed up in court at the very first hearing and said that that's what they want to do. That's what the reporting is on that. So it's not just me. This is what's going to, I believe this is what's going to happen, and it's already started to happen. So you're asking me to bet on the outcome. It's going to be a long, difficult process with lots of uncertainty and litigation. There will be significant cost cutting globally. Racing programs will definitely be impacted globally. That doesn't mean they're pulling out of a whole series. It doesn't mean they're not going to pay Chase Sexton, okay? But things will be reduced for sure. There will be third-party sales of businesses and brands to generate cash. There will be management shakeups because what they're doing is not working. There will be a reduce or loss of control by Stefan Pierer. I'm not wishing that. I'm just telling you, I can see this coming, not with certainty, not even really with 50% probability, but this is the most likely outcome. There will be a possible complete takeover. And who would the likely party for that be? Let me think. How about that Indian auto manufacturer, Bajaj, let's say Bajaj. I don't know. They've already invested. They are a shareholder of the holding company. They will lose all of their investment. And so they're going to go from 49% to 0 and get no money back, or they could spend a smaller check to buy all the debt or the assets out of bankruptcy and go from 49 to 100%, save their investment, and get rid of their partner, Pierer, along the way. I wonder, and they have access to all the inside information that you and I don't have. If I want to go buy this company, how am I going to do due diligence? I don't know, but they do. They know exactly how. That is what I would bet. I'm not saying it's going to happen. This is fluid. It's high pressure. One of the reasons I love this type of business is that you just never know what's going to happen. And so, and as I said, there is a chance that Pierer succeeds and everybody supports him and loves him and he gets exactly what he wants to get and he does it 90 days from now. Let's wish him that. Let's wish him that success. Thank you for listening. This is the last show of Mornings with Scott of probably until 2025, unless I need an emergency episode or maybe unless I miss you guys. Apologies for going long today, but I did promise to everybody that I would do a deep dive on this. And so there you go. Promise fulfilled. Happy holidays, everyone. We'll see you in 2025.